No respite on the Lal Street. The Nifty and Sensex record the biggest weekly fall of 2025, ending the week with cuts of about 3%. The market has given negative returns in 6 out of the last 8 weeks. BSE-listed companies wipe out investor wealth of close to 20 lakh crore rupees this week. On today's edition of Editors Roundtable, we decode the week on the Lal Street. We put the spotlight on Ultratech's entry into cables and wires. I am Reema. With me are Prashant, Nimesh and Nigel. And joining us here in the studio is Rajesh Kothari, MD of Alf Accurate Advisors. Guys, what a painful week. It was truncated, but in 4 days, we've lost 3% on the Nifty, 5% on the Midcap index, and the lowest level since 8 months now.
And portfolio, I mean, that's brutal. Can't talk about it. Right? It's that bad for portfolio investors. You know, stocks are down 20, 30, 40%, and no respite. You know, there is absolutely no buying interest, Reema. I've been talking to so many people in the market. I mean, now, you know, sentiment is badly hurt. You know, for the first time in 3-4 years, I'm hearing that no, now don't want to do equity, or let's give up, or
that's a classic sign.
That's a classic sign. I agree with you.
Yeah.
But you know, for now, the mood is like, when I'll get a chance to exit, can it bounce back a little bit for me to exit? You know, that's the kind of mood now in the market. So clearly, it's shaken a lot of the new first-time investors.
You know, I'll tell you, somebody in office before closing bell, we started early. Somebody walked up to me and said, I was 15 lakhs in profit.
And now
I'm negative.
Negative.
You know, and then he started investing about, whatever, 2 years, 3 years ago. And I asked him, what kind of stocks do you own? And I mean, there were a few without naming names. I said, well, why did you buy them?
Yeah.
You know, so that is also a problem, right? Lots of stocks which were going up. That FOMO feeling was strong, so you kind of got in. You got in at the wrong time and the market turns. Actually, this turn has been very swift.
But you know, right? Prashant, I mean, having said this, this has been brutal for every sorts of investors, whether you're a large cap investor or a mid cap or a small cap or a multi cap. You know, all stocks are down. Even something like a trend is down 40% from the top. So it's not like only the mid and small cap has fallen. Even the blue chips, I mean, what have not fallen are the stocks which have not rallied in the last 3 years. So hardly you've made money in that. So you're not losing money in that. But the fact is, when you've made money, you're giving up most of those gains now.
I mean, it's a good thing if what is happening is if your profits are being taken away, not down in an absolute way, which is already starting to happen. Let me just quickly wrap up, you know, some of the data points. So from the highs now, Nifty is down 15%. So as of today's close, 15.6%. Bank Nifty is down 11%. Mid-cap index is down 21%, and small-cap index has given up a 0.25%, 25% gone from the highs. The maximum damage sectors are real estate, 31% damage. PSU, I mean, actually, then it's the next 3 sectors, PSU Bank, CPSE, oil and gas, it's all, the common thread is PSUs, between 30 and 29% cut. The one surprising space which has seen damage, Reema, is your sector, IT services, which we not actually discussed that much because everything was falling. Yeah. So this also, but the point is, 2 weeks back, the Nifty IT index was down just 8% from its highs. This week, it's down, with a holiday in between, it's down 8%. So that is, and look at the stocks which will come up on your screen, the weekly damage here. Tech Mahindra down 10, Friday to Friday. Wipro down 9, TCS down 8, HCL Tech down 7, Infosys down about 7% as well. So, you know, real estate, the maximum loser, 31. IT index is down 18%. You know, so it's quite stark, and everything is rolling over basically. Now, I just looked at the Nifty stocks, and the date I've chosen is November 29, 2024. Which was the high for NSE 500, the broader index. So from that point, and largely it should be a few percentage points here and there, on the Nifty 50, Trent is down, as Nimesh, you were saying, 41%. Yeah. Hero, Bajaj, Tata Motors, Asian Paints, all consumer names, down 35 to 37%. And then the industrial names, right, Power, etc., Power Grid, NTPC, Coal India, and Adani Ports, anything between 26 to 28% or so. So this is just the Nifty 50, and I'm not even going into mid and small caps, etc. The one thing which is, you know, the reasons we've discussed, I mean, basic reason is it just got overdone, too overdone, equity, and at the exclusion of everything else. But something new which has happened, I think, over the last few days is US growth fears are starting to emerge. And we'll have to watch it, right? So recent data has been weak. Services PMI was the first one, but the consumer confidence, etc. The S&P 500 itself is now rolled over. It's down, it's below its 200-day. And the AI capex trade, which is NVIDIA, etc., is starting to weaken. I mean, the market seems to be derating. Whatever you think of it for longer run, but it's getting derated. And the other thing is that it's very initial kind of hints one is getting, but Doge, which is the Musk spending cut plans, that is starting to be talked about as deflationary in the near term because you're spending less. Lots of deadlines ahead, so it's a full deck. Next week, which is 4th of March, we'll have tariffs come into play. Canada, Mexico, and now China, which is a new one, 10% additional new tariffs. The 5th of March is the China annual, it's called the 2 sessions, the NPC meeting. And it's important to watch because they're taking money which is supposed to come to us if you talk to some people. And there's a Trump call with Xi, which Politico is reporting may happen next week. The President Xi of China. And of course, 1st of April, which is a full month to go, federal authorities in the US are supposed to report back to Trump with what they want to do with tariffs. And that's when reciprocal tariffs, India tariffs and other countries, etc., will all come into play. So just thought we'll line up the damage, but also just look ahead at some of these things, but largely global in nature.
Yeah. Well, Rajesh, what is your experience? You know, when people have been calling for the bottom and the bottom's not coming only. I think you get a bottom when, in fact, people stop talking about it. And now with people throwing in the towel, maybe at times, you know, that's when the turnaround moment comes about. How are you feeling about the market with the interactions that you have with your clientele as well? What are they telling you?
Dekho, basically, if you look at till September, it was always equity, correct? It was like throw the dart, make the money. Correct? That cannot continue. So in September, we said, please expect from here moderate returns. Now the correction is already coming in. No correction is without pain. So we all ask for correction, but when it comes, nobody feels good about it. That's fact of life, right? But let's look at from here what. Equity market के 5 शत्रु होते हैं. 5 enemies of equity market. Remember this. First, our biggest enemy is crude oil. Drill, baby, drill is Donald Trump's statement. So crude oil will not go up in a big way. I don't know how much go down. It will remain a range bound. Good for India. Correct. Number 1. Number 2, the inflation, which is cooling down in India after a long time. Number 3 is the interest rates. RBI has done first time rate cut after again long time. Number 4, the biggest villain this time was the earnings growth for the first time. First quarter Nifty earnings growth was 2%. Second quarter Nifty earnings growth was 2%. But third quarter Nifty earnings growth is 9%. As we move into July, and I'm just talking 4 months away, not 4 years. In bull market, people talk about FY32. Now I'm just saying, please wait for just 4 months, correct? 2Q, you will see Nifty double-digit earnings growth coming back strongly because base is in your favor and union budget gift, 1 lakh crore. And last villain was valuation. Nifty average valuation, 20% 10 years से premium हो गया था. Now it is right now below 10 years average. Now 5 things are in our favor. Now what market doesn't like? Uncertainty. There are 2 uncertainty. पहले budget का uncertainty था for capital gain tax. That has been solved. Second uncertainty is Donald Trump, Mr. Tariff uncertainty. Now last 5 years, forget 50 years. I can give you 50 years examples. Let me give you last 5 years examples. First was COVID and second was Russia-Ukraine war. COVID continued for 3 years, but market took hit in the first 60 days. Russia-Ukraine war अभी तक खत्म नहीं हुआ है, but market took hit from 18th February 2022 to June. So first 60 days you get the highest impact. Donald Trump, that 60 days are about to get over. So market impact, economy impact will continue. Tariff कितना आएगा, nobody knows. But bulk of the market impact is almost over. So I think.
So bottom line, one should look
from
to
here on. If you ask me for the multi-cap product, one should invest from now. We always saying staggered from last 6 months. Now we are not suggesting staggered. We are saying please do lump sum investment for multi-cap. For our mid and small cap like budding beast, we are saying just stagger still over 3 months. Correct? So I think it's a very good time for investment. Look at 3 years from now on.
Okay.
Can you make 11-12% in Nifty? You know, alpha managers will do definitely much better. Answer is yes.
But what your interactions with the clients, they're willing to wait that, you know, because there is panic that's setting in.
Very good question. Very good question.
Is it okay?
I tell you. Till September, when we ask clients, when we were talking with clients, said, "अरे हमारे पास तो ये stock है, वो 50% बढ़ गया दिन में." The expectations are 40%. We were saying 12, 15, 18. They are saying 40%. Now all those expectations are down. Now we are saying do portfolio transfer. Because most investors or speculators or uninformed investors, they have not seen the market cycles. So they have bought just for fun or speculation or for quick money, greed. But they don't know why they have bought it. Like he was saying, he spoke with one of the person, am I right? And he said that he doesn't know what he owns and why he owns, am I right? So this is the time of active management. This is the time for discipline. So you don't do new allocation, it's okay. But even if you do your portfolio transfer and be with the active manager, whosoever he might be, whichever manager you like, you will do significantly well. Because market will double over 3, 4, 5, 7 years. Market will double, but your stocks may not double. So be selective is the mantra.
You know, sorry. I'll just take Nifty is clear, you
Yeah.
said, right? We spoke with Gautam Duggad of Motilal on Monday, it was. What about mid-caps and small-caps? Mid-cap index, this is Monday's data. He said the mid-cap index on a historical basis trades at a 5% premium to Nifty.
That's it. Okay, which is good.
As of this Monday, it's a 50% premium to Nifty.
Yeah.
According to him.
Yeah.
Small-cap index historically trades at a 20% discount to Nifty.
Yeah.
Right now, it is trading at it's trading at 22 times. Nifty is at about 19 times. So still, it's at a premium.
Yeah, but I think, so here there is a very big problem, and I would like to, re-emphasize this point again and again. Top 100 is called large cap. Everything else is called mid and small. 5,000 listed companies, 2% is large cap, 98% is mid and small cap. Is a wrong way to look at it. Good or bad, both are wrong. I think important is to look at the 200 companies after 100 and look at the another 200 companies after that. So if you look at the growth, if you look at the balance sheet of mid-cap companies, they become debt-free. If you look at the balance sheet of small-cap companies, I was doing that exercise.
But what about valuations, Raj?
I tell you. So first of all, this premium or discount, I'm just first of all trying to explain that. Why premium? If a company grows 3%, the largest FMCG company in India grows 3%, what valuation it will deserve? Still it trades at 46 times.
Yeah.
At 3% growth. And you have a largest consumer discretionary company, apparel company, growing at 40%, definitely it will command 75 PE. It's a 2 PEG, am I right? So I think that's what I'm saying. In mid and small, you need to be selective. Rather than looking at valuation versus Nifty premium discount, you will go horribly wrong.
Yeah.
No, but so valuations are okay. I mean, you're saying it's not a big problem now.
It's not a big problem. Be selective. There are pockets where there is excesses, which still needs to be corrected. But there are pockets where there is a huge value emerging, particularly for the stocks which are doing 30% earnings growth. Friend, I'm telling you, in 9 months, there are companies in India which have delivered 40% earnings growth in the 9 months when the Nifty earnings growth is 2%. Now, definitely, you will not get it at 20 PE. You have to pay 50, 60, 75 PE.
So are you willing to pay that kind of PE and still buy in this correction?
We will look at PEG basis, to be very frank. We look at PEG basis. And anything below 2 PE is good. 2 PEG is good, provided your growth is 25% plus.
Rajesh, कुछ stocks बताइए ना. थोड़ा मतलब just for education purpose for people who are watching, what kind of names, how to look at the 3-4 names with some data points.
Okay. So let me give, for example, the consumer discretionary space. We hold. Please put a disclaimer because now we are talking about companies. Please put a disclaimer. We are holding for our PMS, AIF. Correct? Yeah. Say for example, you own Trend. Correct? But again, very important is how much we own is also equally important. Right? So we always believe in diversification. So diversification is a free lunch. Am I right? Like yesterday, there was a one entry of somebody into cables, wires, and stocks are down 20%. So never say conviction. It's a bad word. Never say conviction. Your conviction can go out of window. But this company has been growing at 35% even during the third quarter. Yeah. Now that doesn't mean it will grow 35% for next quarter. Let's assume it's 33 and stock goes down 20%. Take it as an opportunity.
Okay.
Correct? So we always look for the companies which can continue to do 25-30% for next 4 quarters. We never say next 10 years.
Sure.
Who knows 10 years?
Sure.
Right? So that's one example.
Okay.
Similarly, for example, we look at the companies like, for example, exchanges. Okay. So we own one of the name, which is Commodity Exchange, the largest commodity exchange. 90% market share. Yeah. Now, as more and more commodities comes into India, be it a steel, be it iron, be it a crude, be it a gold, they are the biggest beneficiary, irrespective of whether they go up or go down.
Also monopoly.
They are monopoly, and volatility also adds to their volumes, correct? So more products, more expiries, that will add. So always look for that kind of a moat.
And where is it trading at? 30-35 times?
About, depends which year you look forward. We look at normally 2 year forward, so it will be about, below 40 PE.
Okay, what else? MCX Trent?
Sorry, third one?
MCX Trent, what else?
So, likewise, like for example, auto ancillary. We have been holding Uno Minda for a very long time, correct? Stock is up like 100 times in 11, 12 years, 10,000% up. But this company has been growing at 32% compounding for 10 years. So if you think, see, I don't know who will gain market share, Tesla versus Mahindra, no view, am I right? But both will require airbags. Both will require sensors. So you look at the content per vehicle and look for such opportunities. Those are much...
These 3 names you've owned for a long time, or these are some new additions, or you're putting fresh money?
No, this we have been adding even today, and we have been holding for quite some time.
Anything new you've added in this recent fall?
Specialty chemical is one what we have looked
Anything
for.
specific?
So in specialty chemical, we have bought 2 companies from last, I would say 4-5 months. So one is of course Navin Fluorine, which we exited in March 2023. We made almost 14 times, and now we have re-entered again. So again, we believe that the fluorine is a great chemistry. There are only 3 players in the fluorine. Second company which we bought is a Sudarshan Chemical. It's the largest pigment company, and they made one acquisition which is a largest company of the world with a 200 years history.
Absolutely.
So we believe that the growth can be exponential for this name. Third, we have added into the hospital segment. I don't want to name it. It is a very recent addition. We are still adding. And that's one of the largest hospital of the country. And again, growth is secured. And valuations have corrected from last 1 year. So almost around 30-40% from its peak. So it's a reasonable valuation.
Fair enough.
Let's talk about cables and wires, because that was clearly the sector of the day. On Friday, you saw some semblance of stability in names like Polycab and KEI, but for the week, these stocks were down close to about 20%, all because Ultratech is investing 1,800 crore.
Well, that's right. Let's talk about Ultratech's big bet, right? They're putting 1,800 crores in the cables and wires business, and some would call it, well, they are looking at a new vertical in terms of a new business line. Some were questioning, though, what about the capital allocation? Well, the Aditya Birla Group itself, they have been very, very adventurous of late. They made that paints foray. They were looking at the B2B, commerce part of business as well, e-commerce business. They also were looking at the jewelry business, and some of those numbers should come up for you on the screen. So for the past few years, the Aditya Birla Group itself, well, they are betting on various businesses, whether it's in the jewelry space, the fashion retail business as well. They went ahead, they've done some M&A in the ethnic part of the business. They also went ahead and, in fact, they bought some stake in Ron. And besides that, they also got the manufacturing and distribution rights for Reebok. So basically, they have been quite adventurous. Now they've set their sights on the cables and wires business. And for that, they're putting 1,800 crores over the next 2 years or so. Why does Ultratech want to get into the cables and wires business? Well, the industry itself is growing quite well, 13 to 14%. It's moving from 80,000 to around 1 lakh crore approximately. They're saying that maybe some part of the raw material could come in from the group company, which is Hindalco. And basically, they're looking at strengthening Ultratech Building Solutions business. And that's one of the key focus areas. Remember, the cables and wires business has better ROC business, is a better ROC business, though margins are a little bit dilutive. So let's bring the big numbers up for you on the screen. They're going to be putting 1,800 crores. The total revenue potential will be around 7 to around 8,000 crores with margins around 10-11% approximately. But the total market cap erosion in reaction to what they did in the next day itself was 15,000 crores got shaved off, Ultratech itself, 13,000 approximately. While for these cables and wires business, they lost more than 30,000 crores of their market capitalization. What is the street concerned with, particularly with Ultratech Cement? Well, they're questioning the capital allocation. Why are you looking outside cement? We are investing in you as a clean cement play, but you're looking at a non-cement business. The other factor is, they said if the group wanted to do it, they could have done it via Grasim. Now, here's the important part. The cables and wires business was nervous because they feared this is the paints moment. When the Birla Group made their entry into paints, we know what happened. So that's up for you on the screen. The paints industry itself, there was a bit of a derating of the multiple. From around 60 times, it's come down to around 30 times. The fear is that the cables and wires business that saw a re-rating, will it affect the multiple out there? And there are a couple of factors that are common. What's common? The unorganized market is approximately 25% in both of them. But there is a difference. Why? There were a few number of players in the paints business that dominated the market. For example, close to around 6 players had 90% of the market. While in the cables and wires business, well, you have not more than one player that has more than 17 to 18% or thereabouts. And that comes up for you in the screen. The market leader only at around 17%. In this case, it was around 55% approximately. So a few factors that should come up for you in the screen. Why is the paints business much different from the cables and wires business? One is, it's a fragmented business. You have leaders in various geographies, so that's point number one. The other factor is, the distribution for the wires business is very, very different from what paints was. Cement as well as paints, there could be some kind of, some kind of integration out there. But you'll have to build the distribution business right from start. And also besides that, a few more factors. Approvals need to come through for the cables business, as well as margins for the paints business. Well, they're not as much as what it was for the cables and wires business. So limited scope out there. So that's going to be the big question. Will it be as disruptive as what Birla Opus did in the paints business as well? I want to ask you, Rajesh, about that. What is your take? Ultratech, they have announced this. Everyone was unhappy. Ultratech shareholders said they don't like this. Cables and wires shareholders were like, this is going to be an intense competition. Is it a buying opportunity? Because post Thursday's reaction, actually, on Friday, you did see some buying. Your take?
Yeah. See, basically, Nigel, if you look at characteristics of any multi-bagger, see, किसी के मत्थे पे तो लिखा नहीं मैं multi-bagger हूँ, correct? But typically, how a company becomes multi-bagger? Only when you deliver multi-year compounded growth, correct? 20-30% kind of a compounded growth. Now, if you look at for any company for that to happen, if you remain only in your industry, your growth in the long term will be equivalent to GDP growth. Now, you are already largest in cement.
Right.
That means your growth will be GDP plus minus 2%. Correct? Now, if you want to grow 18% in future, after 5 years down the line, you need to enter into the adjacent segment, correct? So you map your competition, you map your moat.
Yeah.
That's where the entry into this kind of a new segment. But why till now you don't enter? So you know that these all are good juicy segments, but you don't enter till the time it moves needle for you. Suppose there are too many segments which is 100 crore industry size, you don't want to enter. But now this industry has become big. This industry is still going to grow another 11-13%. It is almost higher growth than typical cement industry. Please understand.
Right.
The valuation of this business is higher than cement business.
Yeah.
And the ROC of this business is higher than cement business.
So you're saying it's good for Ultratech?
Yeah, definitely it is good for.
But what about for the cables and wires
So for
players?
them it is a new competitor. You fight.
So, but their stocks are down
So
15
which
to
means
20%.
that the multiples will contract?
So basically now it is going to be 3-4 years down the line. First of all, it is not going to happen on day one.
Yes. Yeah.
Now they need to be innovative enough. They need to make sure that they don't lose market share. For them, it is like a one new player in the industry.
Yeah.
See, think of it. 10 years back, how many players were there? Actually, only 2. And then third player came. And then the fourth player came, which got listed in last 2 years. You know what I'm talking about, right? So it has become from 2 to 4 players. 4 will become 5, and you have to take probably again 6th player. But then, if your product profile is right, you will not lose market share. Correct? So it depends which company do what strategy. But it is right thing in my view from the Ultratech perspective. That's the only way to grow.
Rajesh, hold that thought. We need to slip into a very short break. We'll come back and continue our discussion.